Welcome to the Money King, the channel where we break down money, investing, and wealth building in a way that's simple, powerful, and practical. If you want to grow your money, avoid costly mistakes, and build long-term financial freedom, you're in the right place. Most people don't stay broke because they don't earn enough. They stay broke because they don't understand how money works. And the difference between someone who struggles financially and someone who builds wealth often comes down to a few simple decisions. In today's video, I'm going to show you exactly how to start investing the right way, even if you have zero experience, even if you're starting small. No hype, no gambling, just strategy. Part 1. How to start investing from scratch. 3 years ago, someone messaged me and said, "I want to invest, but I feel stupid even asking where to start." Let me tell you something. If that's you, you are not behind, you are not late, and you are definitely not stupid. Most people never start because investing feels like a secret club with complicated language. But here's what's really happening. They're confusing complexity with intelligence. And today, I'm going to simplify everything. By the end of this video, you'll know exactly what to do first, what accounts to open, what to buy, and how to avoid beginner mistakes. And here's the best part. You won't need thousands of dollars. You won't need to predict the market. You won't need to watch charts all day. But before we go further, let me ask you, what's actually stopping you right now? Fear, confusion, not enough money? Keep that answer in your mind, because by the end of this video, that excuse disappears. Let's build this step by step. Why investing matters. Imagine you worked hard for 10 years and saved $20,000. Sounds responsible, right? Now imagine inflation quietly reduces its buying power. Same money, less lifestyle. That's what most people don't see happening. Inflation is silent. It doesn't announce itself. And here's the scary part. If your money grows slower than inflation, you're technically losing wealth, even if your bank balance looks bigger. Now pause. If your future self could talk to you today, would they thank you for saving only or investing wisely? Investing isn't about being rich. It's about options. Options to leave a bad job, options to travel, options to retire with dignity. And here's something powerful. Wealth isn't built from income alone. It's built from assets. And in a few minutes, I'll show you the simplest assets to start with. Mindset and time horizon. Let me tell you about two friends. One waited for the perfect time to invest. The other invested small amounts consistently. Guess who built more wealth? Not the genius, not the market predictor, the consistent one. Here's the truth. Most beginners miss. The market rewards patience more than intelligence. And here's a question most people never ask themselves. When do I actually need this money? Because if you don't need it for 20 years, why panic over a bad week? Short-term noise destroys long-term plans. Let this sink in. Volatility is normal. Growth is historical. If you remember nothing else from this section, remember this. Time in the market beats timing the market. And next, I'm going to show you why foundation matters more than investing itself. Emergency fund plus debt. I once saw someone invest aggressively while carrying 24% credit card debt. That's like trying to fill a bucket with a hole in it. Before you build wealth, you protect it. Emergency fund first. Why? Because life happens. Job loss, medical issue, family emergency. And if you don't have cash reserves, you'll sell investments at the worst possible moment. Now here's a reality check. If your debt interest rate is higher than expected investment returns, you're mathematically losing. This isn't exciting advice. It won't go viral. But it's the difference between fragile investing and stable investing. Strong foundation, then growth. In the next section, I'll show you the exact accounts beginners should open. Accounts you need. Think of investment accounts like containers. Without the right container, you can't hold the asset. There are people trying to pick stocks who haven't even opened a brokerage account yet. Step 1. Brokerage account. Step 2. retirement account if your country offers tax advantages. And here's something beginners ignore: fees. A 1% fee sounds small, but over 30 years, it can cost tens of thousands. That's not dramatic, that's math. So keep it simple, keep it low cost, and if you feel overwhelmed, robo-advisors exist for a reason. Automation removes emotional mistakes. Now that you have the container, let's talk about what goes inside. Asset classes. Imagine building a house using only one material, only glass, or only wood. Would you feel safe? That's what happens when people invest in only one asset. There are 4 core building blocks: stocks, growth, bonds, stability, cash, safety, real assets, inflation protection. Now here's a quick test. If the stock market dropped 20% tomorrow, would you panic? Your answer determines your allocation. Diversification isn't about avoiding risk. It's about controlling how much risk you can emotionally handle. And next, I'll show you 3 simple portfolios you can copy today. If you've watched this far, that tells me you're serious about your financial future. So here's what I ask from you. Hit the like button so more people can learn this. And subscribe to the Money King so you never miss strategies that can literally change your financial life. This channel is built for people who want to grow, not gamble. Simple starter portfolio. You don't need 15 stocks. You don't need daily trading. You need a mix that matches your personality. Conservative, balanced, aggressive. Now let me ask you something honestly. Would you sleep peacefully if your portfolio dropped 15%? If yes, you can handle more stocks. If no, you need more bonds. Investing is as much psychological as financial. And here's something freeing. Your first portfolio doesn't have to be perfect. It just has to exist, because adjustment is easier than starting. And now, let's talk about what you actually buy. First, investments to buy. If I could restart as a beginner today, I would not pick individual stocks. I would buy broad index ETFs. Why? Because instead of betting on one company, you own hundreds. Instant diversification, lower stress, lower fees. And here's something powerful. You don't need $1,000 to start. Fractional shares change the game. Even small, consistent amounts matter. The key is not size, it's repetition. And in the next section, I'll show you how repetition turns into wealth. Dollar cost averaging. Imagine 2 investors. One waits for crashes. The other invests every month automatically. 10 years later, the consistent one usually wins. Dollar cost averaging removes ego from investing. You don't guess. You don't predict. You participate. And participation builds wealth. Here's the hidden power. Automation protects you from yourself. No overthinking. No emotional reactions. Set it. Let it run. Review annually. And speaking of emotions, let's talk about the biggest wealth killer. Risk management. The biggest risk in investing isn't the market, it's emotional decisions, panic selling, chasing hype, following social media experts. Rebalancing once a year forces discipline. It makes you sell high, buy low, without guessing. And here's something critical. Most long-term wealth is built during boring years, not dramatic ones. Stay diversified. Stay calm, stay invested. And now, let's make this practical with a 30-day roadmap, 30-day action plan. Clarity beats motivation, so here's your 30-day blueprint. Week 1, define goals. Week 2, open accounts. Week 3, automate. Week 4, review and learn. That's it. Not complicated, not overwhelming, just structured progress. Imagine watching this video today, and 30 days from now, calling yourself an investor, not a dreamer, not a planner, an investor. And finally, let's wrap this up. You came into this video confused. Now you have a plan, and that's powerful. Remember, you don't need to be perfect. You need to be consistent. Start small, automate, stay patient. If this helped you, like this video so more beginners see it. Subscribe, because part 2 gets even more practical. And comment below, what's your biggest investing fear right now? Because in this community, we build wealth intelligently. I'll see you in part 2.